going on there? I just had a little pop-up on my screen. I don't know if that's normal. I don't know if I did something or if that's something going on back end. So I'll continue, whatever. So Euro's at 50 as well. Yen is at 44. New Zealand's at 67. CAD. So it seems like CAD longs seem like a relatively good idea right now. Although I think not long-term longs. I think it'll be more intraday longs. Just because Canada's overall economy is quite weak. However, the surprise meter has given them quite a good score. Australian dollar, I think, could be a good long as well. So I'd prioritize Australian dollar longs, sterling or GBP shorts, yen shorts as well. I think medium short term. That's kind of all I've got in terms of real, directional bias at the minute. Anyway, ladies and gentlemen, I don't know what's going on with the screen. Again, I don't think it's a problem. I think you guys have a normal view. Guys, have a good one. I'll see you all very soon. I think there's Chris Pulver coming to take over right after me. Let me just double check so I can throw it over properly and keep this all professional. It's Chris Pulver. And then I'm sure Nick will come and join him at some point for meeting minutes. Guys, have a good one. Stay safe. Don't get margin called. And I'll see you all tomorrow.
Where are we going again? I thought you plugged it into the GPS. Oh my gosh, what is that? What's happening? Relax, it was a Pulver alert. A Pulver alert? Yeah, you know, Chris Pulver. He teamed up with A1 Trading and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent. Frank, that's really cool that you can see his signals, but why are you doing that when we're space traveling? Because I'm bored and we have light years till our next destination. Another trade already? Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Oldie buddy goodie. Nice stuff. Hey, everybody. Happy Wednesday. Here's my screen. Okay. So we have FOMC minutes coming up at the top of the hour. All eyes on NVIDIA. I posted this inside the Pulver alerts in the A1 Trading Discord. I sent a little video out. It's like 18 minutes long. Here is a look at it. So if you are a member, A1 Trading community, inside the Chris Pulver Trades Trading Journal section, all eyes NVIDIA earnings, they matter a lot. Literally, NVIDIA is like 7+% of the entire S&P. It's $4.5 trillion, kind of hanging on a cliff. Is it going to save the market? Maybe. I think we're going to see a beat. It's just a matter of, does Wall Street like it? Is it super reassuring? Is it encouraging that NVIDIA will take the markets back up with it? Either way, wherever NVIDIA goes, the markets are going as well. So anyway, we'll take a look at the charts here in just a moment. We also have FOMC minutes. We're literally sitting 50-50 for the December 10th outlook, whether or not the Fed's going to cut rates. U.S. non-farm data, this comes out tomorrow. I don't even know if this matters, to be honest. I mean, I think now it's so easy just to say oh, that's fake news. It's 45 days delayed. It's whatever. I don't know. It's gonna come. But the forecast is pretty interesting. 58,000. Last time we did ADP print, it was a 42,000. I think it was expected for 32. Came in 40 plus. So that was a little bit of a beat in the last 2-3 weeks. Unemployment rate is still forecast to be the same at 4.3%. Let's see how prices take the release in the mornings. I'll be watching the futures market. Couple things here. Although it feels like the brink, how many of us feel that way right now? This market's pretty much on the brink of either falling in a big way or trying to stabilize. But here are my thoughts, and you'll see this in the video if you check it out. The market can win both ways. I think that the bears are so bearish and the sentiment is so bad that I don't see that being a sustainable follow through. So I could see the bears being rewarded in the very near term. Maybe a push down to the big moving averages, like we've got the 100, the 144, the 200, maybe a quick flush to those levels, and then the market V bottoms and tries to rally to the end of the year. It might be some bigger version of what we saw back in 2024. Anybody that was trading during 2024's end of year, once the Fed started to chat in middle of December, the market was down about 5+%. So from this recent high, market was down about 3.7, 4.6, ended up getting down as low as 5.25 going into the end of the year, and then rallied hard into the beginning of 2025. So I could see kind of this environment where the market's just kind of fatigued and, hung over and doesn't really know what way to go, but it's not, the bears aren't going to win in a way, the bulls aren't going to win. And then we figure out like where reality is, and there's going to be some type of equilibrium, right? So let's talk NVIDIA for a second. Here we are, total indecision candle, a little bit off the lows, sitting around that 50-day moving average, just like everything else. So price below the 50-day, to me, this is a big indecision zone. So between the 50 and the 144 and the 200, this is indecision. Okay. So if the market's going to be, excited to see earnings beat, then maybe we come back up. The plus minus on the earnings print for this week's expiration is about $13. I can show you that right here in the broker platform. So you go to NVIDIA, Friday's expiration, we have a plus or minus 1197. So this was up as high as about 1280 early in the week, now showing 1194. I calculate out based on earnings. Move this out of the way here. Based on earnings, we have a previous earnings history of around 5.88%. 5.88%. So 5.88% at the current price, which is $185.19. Looking at about a $10.88 move based on normal historical earnings. Okay, so let's go to NVIDIA. Let's go some earnings history. And here's your average round. Oh, I think corrected, 5.66%. Sorry, so a little bit less. So 185.19 times 0.0566. So we have a $10.50. So brokers showing, I mean, granted, we got a 20 plus VIX, so the implied volatility is a little bit higher, plus or minus about $12 on the week for this week's expiration. That is including earnings. This is what market makers have to do. Usually it's kind of a big nothing burger because it's such an important earnings event that there's probably just ridiculous amounts of positioning one way or the other. It's super liquid. It's literally stock number one, and I don't think we're gonna have like major surprises. I mean, that would be like having a major outlier move on the S&P or the NASDAQ, which is very difficult to get. So because it's so heavily traded, because it's super liquid, I would not be surprised if we go no more than $10 or $12 up or down, or it just stays right in the middle, and everyone that's trying to buy and look for direction is not going to get paid because you're paying the premium. So here's an example to look at it. If you trade right now, we're at 185. If you buy a 185 and you buy a 185, the broker says for a $12 expected move, or what I'm calculating out to be about a $10.50 move based on historical earnings, you're paying $13.13. So you're paying more premium than what the market's probably going to give you in direction. That being said, do I want to sell NVIDIA at a higher low? Well, I mean, I wouldn't mind looking at NVIDIA as, if we fall to the 200-day moving average, or look at this from a fib, drag this fib from, that low to high. I thought initially that's probably the low to high. Let me take this up to the tippy top here. So, we pulled back to the 236. I could see the 30 and 38%. If this offers support in here, I wouldn't mind looking at like a bull call spread or some type of credit spread in there. Probably a bull call spread, a debit spread to avoid assignment risk, just in case this thing is going to get a little bit dicier to the downside. I do have a bunch of ratio spreads down here, naked puts. I have like a 105 by 100 for Pulver alerts. It's a ratio spread. There's still like a 98% chance profit on that trade that's out to January. I did close out this area here. I closed out a trade. It was a 150 by 140 by 130. I pulled in about $4.95. I just closed it down for about a $325 winner. So that debit was like $1.70 or so is when I closed it. So I took that profit just in case this gets a little bit dicier to the downside. That's gettable with the expected move, versus if we're coming all the way back to like 105 or 100, I'll take some ownership in NVIDIA. This thing would be down, 40, 50%. If that's where it's at. From the all-time highs, if we come back to 105, this would be a 50+% discount on NVIDIA. I don't think it's going to happen. But if it does, I'd certainly say, well, I'll take some ownership and I'll sell some covered calls and I'll make some income on it. And I may not treat it long term at all. So anyway, just looking for some income trades. I put a trade on today on CEG. This is Constellation Energy Group. They are getting the green light and the thumbs up from the government for 3 Mile Island and some nuclear plays. I'm not doing it really close to price action. I am way out here with options. And basically, I'm going to do a longer dated option trade where it gives me about $2.35 profit. So initially the trade I took was only it was only like a $5 profit trap, and I could get like $450 for it. I was tempted to take that trade, but I'm looking at potentially like a $20 profit trap, which is $2,000 of buffer, and then I would take ownership in like the low 140s, I believe. I think it was like a 185 by 165. You can see that in the Pulver alerts under stocks options trades. I just posted that this morning at 10:54 a.m. So that's a new trade. I posted a trade MSTR. That's going to be interesting since Bitcoin is down over 30%. It's still out of the way. It's a 155 by 140. We'll see how that plays out. That's out to January. Tesla, the recent trades, index-wise, have been pretty active on the indexes. Qs took a trade this week, and SPY took a trade this week. Because the VIX is elevated, I am taking some stabs at some premium. Okay. So what I need to watch for today, we do have FOMC at the top of the hour, FOMC minutes. It's not a press conference. It's not Jerome Powell. But here is the Fed watch tool. Here's the probabilities. There's no way. What? That jumped so big today. I looked at this morning. It was literally 50-50. Wow. Okay, so this is now a 68% chance that they are going to pause through December. Crazy. And again, I think all it is delaying the inevitable. I think they're still going to cut rates in 2026. That if anybody looked at this morning, it was literally 50-50. It was like 50.1 to 49.1 or 49.9, whatever. And now it's jumped in a big way to show that the pause is now winning out. So this is certainly a little bit more revealing than a 50-50 because nobody knows what that's going to mean by the time we get to December 10th. And now 68.2 is like, well, looks like the Fed is kind of leaning towards nothing in December, and whether the market likes it or not, we don't know. And again, this could all change. If we have non-farm data come out tomorrow, if we have inflation data come out prior to this December 10th meeting, all this could be data dependent. All this could change the Fed here at the last minute, but that's now a pretty decisive probability for a pause. So I did not see that this morning, and here we are. That's a pretty big shocker. So keep an eye on that. Let's take a look at kind of some top-down macro stuff. S&P is clinging to some gains on the day. Here is where we are at. So we opened up just above yesterday's close, and we're pretty much just flat on the day. I am looking at a couple levels to see intraday if we can stay below 66.90 and stay above 65.45. I'm going to ride this thing out for the remainder of the day. I should probably just take profit here in the next 30 to 40 minutes, but it's getting a little sticky. Let me see where I'm at for my trade. So it's trading for 30 cents. Let me see if I get it. 30 cents is a pretty good exit. Let me see if I can get out of here for 30 cents. That's probably a safe exit. Let me take 35 should fill. I'll sit it at 30 right now. Let me go 35. All right, so I'm out of that trade for 30. That's a 65-cent winner. I'll take that. I'm going to close this one down. Okay, good stuff. All right, so I'm taking that winner. And now I just get to sit back and wait and see what happens. I do have some trades up here near my calculated tops on the day. I do have some trades down here near my calculated lows. If price stays in the middle, that's kind of perfect. Range bound trading, market maker day, noisy day. All lies on NVIDIA after hours to see what the market does. Okay, let's go dollar index. Well, actually, let me go SPY and Qs really quickly. I think these are important levels to watch. Right now, this is an indecision zone. I know it may not last very long, but if we're below the 50, but we're above the 200. You notice how this 50 period is not crossing over anything, right? Like all these are still stacked up in vertical. So if price is below the 50, that's a hesitancy. If we go sideways on the 50, price stays kind of in this area where my 50 period is still above my 144, still above my 200 moving average. This is just a big indecision zone. So the bulls, in my opinion, have one big spot, and that is right around this 144 to 200. That would be if we're going to have some type of quick, ugly move to the downside. That's where I see the market bouncing and rallying kind of hard to kind of save itself. And that might be one of those runs that it gets all the way back to highs again, makes everyone think there's a false sense of confidence, and then it rolls over again. Broadening patterns can very quickly become topping patterns in the market. So even if we have a flush down and we start to get a rally off of that, I'm skeptical of how much higher that thing can go. As we're sitting here talking about valuations, the Cape Shiller at 40 plus, we've got the Mag 7 at 30 times earnings, the overall market at 23 times earnings. It's going to be difficult for the entire market to just to crush to the upside. So, like I said, I think the markets can win both ways. Where the bears are so bearish and they may get a taste of victory, and then they pay up and they overpay for premiums, and they overpay for hedging and protection, and they get beat up the other way, and the market goes right back to highs again. So let's see what happens. Okay, you previously said the Fed has never been proactive as they're data dependent. The only way they can make decisions is after the yeah, it's true. They've never been proactive. And they don't need to be proactive. I mean, that's the question is like, I get it that everyone's like blaming Powell and blaming the Fed for these policy mistakes, but they've never been a proactive entity ever. I do think that some of their models are outdated where they're looking at lagging information. And I think what's a better reflection of the true economy right now is, look at what bonds are doing. Look what bond yields are doing. Look at what credit spreads are doing. Take a gander of like third-party measurements that are giving us actual inflation readings and not the crap that they're printing out. It's like we're looking like backwards, and like right now in the present, right now forward, it's like all this stuff is like at their fingertips. They have it if they want it, but it's like they're not making policy decisions on current data. So that's why they're reactive, and unfortunately, it's never been a good thing. But I also think what makes it worse is the reactive policies have been what's created some of the biggest disparities in the market. Our biggest crashes and biggest backstops of the Fed have created incredible buying opportunities for those that have the courage and the assets to buy at liquidity lows. But if you're just, if you're near retirement and this market has a 20 to 30% correction, you're going to delay retirement. It's like, and that could just happen because of unnecessary volatility in the market. So, just go back to 2013, go back to 2014, go back to 2015. We are now a decade in of nothing but bubbles and bursts, and they're mini, but they're happening, right? I mean, if we go to a weekly chart here, 2015 to now has been like one of the crazier decades of price, and yet we have still made all-time highs. It's not that far back. I mean, obviously, you take your 2000 to 2001, take your 2008, 2009, that was a lost decade, right? Price didn't go anywhere for a decade. So this high that was created in 2000s peaked again in 2007, dumped all the way. I mean, we didn't get to this high. Like, this is crazy, right? Peaks in 2000. We didn't really regain those levels until 2013. So if you're a buy and hold investor, you didn't make any money for 13 years in the S&P. But if you were adding and dollar cost averaging and a 401k contributor for those 13 years, by the time they started to get some traction, yes, it was a sucky 13 years. But afterwards, you're happy, right? And it's like we stay the course, and bigger picture and longer term, this is designed to go higher. And the best companies in the world can drag it higher. I think right now the Mag 7 is completely disconnected from the real economy. I think the Mag 7 is essentially connected from the entire stock market. It's its own market. And so as much as we want to say like the Mag 7, it's scary, it's too concentrated, it is. But it's also you're supporting and getting behind some of the strongest companies in the world. And they don't want to lose that power. They don't want to lose, top 10 standings. They don't want to lose the automatic flows. They don't want to lose the positive drift. And they're big enough and strong enough, and the market's obviously market cap weighted, so it matters. And so, yes, if we have a ugly rotation out of Mag 7, ugly rotation out of NVIDIA, ugly rotation where we question this AI stuff, we question tech, and we need to have a deleveraging, Mag 7 going down is going to be terrible, right? If Mags goes down, it's dragging the whole market with it. If Mags is sideways, we're going to go sideways in the markets. I don't care if 490 stocks all of a sudden show up and do the greatest profit taking ever. right? If all of a sudden margins become amazing for the small caps and mid caps and 490 stocks, it probably won't matter that much compared to how big Mag 7 is. Like, it's nice to have 490 stocks participate and contribute and maybe be less sucky, but it's really all dependent on, are we going to continue to see forced inflows to Apple and Google and Microsoft and Meta and Nvidia and Tesla, your top 10 stocks? Like, order flows matter. So that's the crazy disconnect, is if the markets don't want Mag 7, then it's going to hurt. If the markets just keep inflows and they stay steady and the other companies pick up the slack, then maybe we just have a stable market. And this is like the slow grind. I'm going to do one thing really quickly. I want to build this out. Hopefully I can find a decent linear regression channel. Let me see if I can find it here. Let me go need clean. I just built like a nothing workspace. It just kind of drags the stuff out. So let me go linear regression. And I don't really have a linear regression channel. It's going to be just like whatever a standard linear regression channel is. Here's a daily. Let's go to a weekly. Okay. I'm curious how far back I can go. Looks like this takes me back to like 23 or so. Let me see how far back I can go. Let's look. Upper deviation 2 and 3. Let's go 3. There we go. All right, so I'm just using a standard linear regression channel, going back 100. It's a 100 period. I mean, even from COVID to now, COVID to like the peak in 2021, we pulled back into the channel. We are still in that channel. So if I change this to a 2, what's up, Nick? How are you, man?
What's up, man?
How are you? You too.
I'm good. Good. You too.
So I just want to point out, like, everyone's worried about this bubble stuff. Like, I just pulled some really straightforward like linear regression model. We're not in a bubble. I mean, sure, the 2020 bottom to the 2021 peak, like, yeah, we got a little ahead of ourselves. The frothy valuations and the market just got overcooked. You can see it now. That linear regression angle probably changes, but since we started this this deleveraging, de-risking in 2022, we've actually been pretty darn steady. So a pullback into 6,300, 6,200, sure, that sucks, but it's also still going to hold support. If it doesn't, we'll know it. But this big level at 6,150, I think technically is, there's plenty of spots to look left on the chart. That's kind of my point, is if we fall to this previous all-time high that's right around a 38% fib, and I don't know. What do you think, Nick? I mean, we're trading below the 50-day moving average. What do you think's going on here, dude? Do you think we're just gonna just roll over and this is the end of times? Did you hear what I said, where I think the market can win both ways?
Yeah, and I think that would be, we've talked about this before, this concept of, somebody actually left a comment on my channel today. They said nobody in the last like 10 years has really traded a very sideways prolonged market. And it's kind of true. I mean, other than what you were pointing out with like 2015, you had a really sideways market.
Yeah, 2 years.
Yeah, yep. A lot of choppiness there, but yeah, it's an interesting market out there. Somebody asked, why is Bitcoin selling? I mean, forced selling, I think, is kind of what's going on. I think you have some leverage that's getting worked off in this system, and kind of going along with what you were saying, Chris. I mean, I don't necessarily see this as the end days. I think that you very well may have just some digestion of what has been a really good move this year. And almost everyone, when you listen to people, right, everyone is convinced this market either has to crash from here or it's going to new highs. And I think it's very fair to point out that although it hasn't been the norm, we very well could just have chop for a while. I mean, even gold this year, which has had an incredible year, had multiple months in between of range bound market environments. So I think the big picture here for the AI trade is, I don't think it's dead. I don't think I think that whether you want to say we're in a bubble or not, I think that, is there likely overspending going on? Sure. Is all of it going to turn into perfect, profits on the other side of this? Probably not. There's probably going to be some wasteful spending. There's probably going to be some really effective spending going on from all these ginormous companies who are investing so heavy in AI. But I think if everyone is calling for a bubble, that to me tells me we probably aren't at the top of the bubble. And I'm talking
agree.
about this just real quick, just to jump in here with some charts to show this. I mean, it is a little bit anecdotal. Everybody seems to be screaming, I mean, the bears are real loud on social media right now, but they're also loud in our sentiment tools. The AAII Investor Sentiment Survey remains very, very tilted in favor of the bears, meaning just sentiment, crowd sentiment, very bearish. Put to call ratio has been recently pretty elevated. So we've seen a lot of put volume coming into this market, a lot of people quite nervous. We've also seen the crypto crowd really taking a hit here recently, down another 4% for Bitcoin. So yeah, I mean, I think crowd sentiment is really pessimistic. What that makes me nervous for is that if you're super bearish or even short the market, look, we haven't gone into an NVIDIA print with such negative expectancy in quite some time. My concern would be there'd be a lot more risk to the upside right now trying to short this market into what could be, an exciting print for NVIDIA.
Yeah. So do you think technically NVIDIA is capable of just ripping back to highs? Let's look at Microsoft. This is my concern for where NVIDIA is right now. We've had a decent enough correction here, about 15 to 16% off the recent all-time highs, that something tells me we could play around with similar to what Microsoft is doing, which is we had an exhaustion gap on earnings and then failed, came back to retest it and failed. And I could see NVIDIA doing something very similar where, we had this exhaustion gap. That was the like terrible market breadth rally post October 10th. We get back to highs here, led by Mag 7. Market breadth is terrible, and then we give it back. I could see positive earnings, top and bottom beat, and NVIDIA's back here to like 195, maybe a surge into the 200s. But I would question all-time highs with a lot of momentum. I think that if we get up here, it just kind of stabilizes things. If we gap lower, it wouldn't surprise me if we gap lower and then we fill that gap almost immediately just for a near-term trade. But if we beat and it drags the market higher, that's going to be good. I think that kind of stabilizes into the holiday trading where, everyone can enjoy the Thanksgiving because NVIDIA just popped up and dragged the market with it a couple percent. And maybe it's like, okay, we are not looking at like, below the 50-day anymore. Maybe we reclaim the 50-day. So if the SPY comes back above the 50-day with some panache, maybe we're back to like 670, 675 or so. All-time highs are 690. SPX is 6920. I mean, we could get there. But the longer we stay up near these highs, I am kind of questioning this as a sideways can be challenging. Sideways at this point in time at these all-time highs, sideways to me is possibly distribution, which is smart money's taking money off the table and de-risking, deleveraging, and not necessarily like adding puts and adding tons of downside protection, but just, if you've got a 60% stake in equities, you're probably shaving that down to like 40 or 35%, maybe 30%. Like you're cutting risk and exposure in half because it's smart money. It's like there's a de-risking I think that would go on. And obviously, if it tumbles over, you're not going to get hurt nearly as bad.
Well, the thing is, Chris, I actually, as somebody who is bullish on this market and wants to see it go 5-6 years of a bull market, I'm happy to see this happening where for the first time in a while, AI is getting checked at the door. People are asking, hey, where are the profits? What's this spending? People are challenging it. They
quickly went to debt, dude. That's what's so dumb. It's like, if it was just like percentage of sales because there's multiple revenue streams for Google's and Microsoft's, but it's like, I think Oracle made like the dumbest thing. It's like they just came out with like, we're going to issue debt so we can build up because our demand is so high. I get demand is high, but you have to raise debt to get there. It's like, that's all that does is echo 1999. So
Oracle erased all of its gains here since that ginormous pop, the announcement of the deals going on and all the, circular dealing that people are worried about. My point though is, in terms of this market, it has been incredibly resilient. I think that it can continue to be overall resilient. However, seeing these pullbacks that we're starting to see, I'm very comfortable with it. I'm actually glad to see it because again, where we've expressed frustration in the past on the streams is these, never-ending kind of hardly a pullback anywhere moves. We're finally starting to see something that as traders, for those who have been patient, a 7%, 7.5% move to the downside in the NASDAQ is constructive. We can start to work. We can start to look at where we want to be positioned, where we, maybe can prepare for it. From just a technical perspective, really quick on the NASDAQ, here's my thoughts. I've got these 2 lines drawn on my screen. I am looking at, I think that we are bullish if we can get back above. If we have a really strong NVIDIA print, I think we're bullish back above this 25,000 level, let's call it on NASDAQ. And then I think that I also would potentially be looking to take a stab at some things that I like if we did get a flush back down to that October 10th low, right? So the big sell-off before we got really strong demand. Those are my 2 levels on this chart right now. I think we're in no man's land. It's been a really back and forth choppy day where you had the huge surge up, complete reversal intraday. So I'm looking at this and I'm saying, okay, look, the long-term upward trend still remains intact in my perspective. I would love to see a retest of the 100 and maybe even that 200-day moving average. Would it feel nice to get that? Probably not.
Yeah.
But I think it would be a healthy thing if you want to see this thing continue for the next 2 years.
Yeah, I mean, if you are looking at like a 2 to 5 year horizon, the 200 day is a perfect level to start dipping your toe back in the water. But it probably comes with some ugliness. It comes with, once you test the 200 day, question now is the 50-day making directions down there. Like this is where it all kind of shifts, right? Right now, everything is still stacked up vertical. You have your 200, 144, 100, 50. Nothing is crossing over. So if all we're doing is staying here indecisive right now with price action, if price gets back above and reclaims, all these start to shift up again, and they still stay stacked. What is not good is what Bitcoin has been doing, which is literally crossing over, and we've had a death cross just recently. Here
Bitcoin
is your
ugly, man. What are your thoughts on this?
I mean, what it's making me do is, my exposure that I have in Bitcoin is weighing on me a little bit. It's like I've got a 5 to 10% allocation, but now that it's down 30%, like I'm feeling some drawdown a little bit. But what I'm going to do is probably shave my exposure in half with trading options to lower my cost basis. So my exposure is IBIT and MicroStrategy primarily. MicroStrategy, my cost basis is down to like, I think 240 is my cost basis. It's down to 195. But I could also get, if I go out 40 to 60 days, I can get like a $20 to $30 covered call. So like, I'm not worried about repairing MicroStrategy, but it may be something I'm not necessarily holding, for like upside appreciation. So let's just say that I go from like, I potentially have an assignment coming at the end of the year, which would be 4 strikes. And so it'd be a 59, 57, 50, 50. Let me check the numbers here. Let me give you the exact numbers. I have some naked put combos on IBIT. So I have a naked put combo in the 30s. These are still likely to be profitable. We're at 50 right now. I don't think we're getting a 31 by January, but these are the ones that I may get assigned. I'm at 59, 6, 53, and 50. So, I mean, we've already fallen 30%. These might all get assigned. My break-even price and all those would be 400 shares. I'll do the math. So 50, 53, 56, and 59. Oops, fat fingered that one. 53, 56, and 59 divided by 4. So I'd have a break-even of 54.50. With this exposure, I already have shares. I don't necessarily want to, double down on my shares. I think that's a little silly for me. So what I'll do is immediately with this break even, I'm just going to collect premium and get a break even that makes me somewhere between like 500 to $1,000, repair it, get some buy power back, and then still keep a position in IBIT, because I think longer term, I'm gonna hang on to Bitcoin. Like I think as a percentage allocation, it's to me, 5% is pretty fine. 3% for conservative, but I'm personally like, I'm 10% Bitcoin for myself, but I can also stomach the swings of what we're dealing with right now, which is, we're down 30% from all-time highs. What I thought was interesting is I looked at the betting markets, like Poly Markets and I think it's, is it Kalshi's the other one? Oh, those are the 2 big betting markets that everyone's following. All right. Anyway, you get like 3 to 1 odds or 4 to 1 odds or 5 to 1 odds if Bitcoin gets back to like 110 or 120 by the end of the year. I mean, I don't know what the probability is. I don't know if we're going to get there by the end of the year. Might be a little bit dicey, but I mean, that's a heck of a recovery if we get it. I just don't know what the catalyst would be to have Bitcoin all of a sudden surge at the end of the year. But I think it's been overall, I'd say your Bitcoin enthusiasts have been really disappointed in Bitcoin. You have a pro crypto administration that has, I mean, how much money did Trump make and the family make on Bitcoin with Trump coin? Billions of dollars. And yet they're down 99% from where they started.
It is. I mean, it's wiped out year to date. Bitcoin has pretty much erased all of its gains and more. It's gone negative on the year.
Exactly.
Yeah. I mean, crypto, it is a bloodbath out there. And it's one of those things. It's like, if you really like crypto, what's interesting, this is always how it goes. When the people who really like Bitcoin, these are sort of your moments. Now, I don't know where it's going with any sort of certainty, but if you like it for the longer term, not only is this actually kind of normal, but historically, if crypto were to repeat its historical tendencies, these would be places to look at it with an open mind. However, most people are not doing that. Most people are absolutely rushing for the exit right now.
Yep.
However, let me also warn, that does not mean that it's not going lower. We could very well see. I mean, you've got some technical support way down here around 75. And it seems like it's making a beeline for that now that it's lost that 50-week moving average. We talked about this every day on the streams and videos. Watch that 50-week moving average. Now that it's lost that, man, it's your next level, 100 week moving average and the 200 weekly moving average are still ways away. So you very well could get those levels retested. So wouldn't be pretty. But again, if we're talking about continued pullback in the NASDAQ, NASDAQ is, what do we say? We said 7.5%. If this thing broadens out to a 10, 15% pullback, again, still in the realm of healthy pullback land.
Yep.
Bitcoin's probably going to 50% off, something like that.
Yeah, man. And I mean, so my chart's like, I've got a nice little bull channel that should hold support around like 85 to 80, but you look left on the chart, your outer trend line that goes back to the 2023 start when this thing was, all the way back down to 15K. We could talk about previous all-time highs at 74. And potentially the trend line, which should be, 74, just catching a falling knife into like the 60s or 50s. Look, Bitcoin has had down years and they have been down as much as 70, 80%. Like that's how bad the pullbacks can be. So, like I said, it's not fun. I know that my core position is certainly affected by this. However, it's a fraction of the portfolio. I can also sell a lot of premium around it. I can repair the trade. I'm not worried about repairing the trade, but it's more the inconvenience of, so much for Bitcoin going to all-time highs and, actually being like an alpha to my portfolio. Instead, now it's dragging some of my year-end gains to the downside, which, kind of sucks. But I'm going to be patient. I'll keep the allocations. What I'm adding to it, like I said, I'll just kind of look at those as repair opportunities, and then just kind of keep a base position. But like you said, to the weekly moving averages, here's one thing on the daily chart. We are below the 200. We got the death cross today. The 50 and the 200 have crossed officially on the daily chart. Also, this is a 10-period monthly moving average, and that usually is a great spot to say there's no reason to be long anything if it's below this. So I think for me, it's like there's no hurry to get into Bitcoin, even though this is an attractive 30+% discount. There's no hurry to get back into it because now it's a matter of let price prove. Even though this could fall, why would you get in and watch this thing tumble down to $70,000 when if it decides, it's going to stall here, it's going to stabilize here, it's going to start working its way back up, then we cross this, then you can start adding exposure and then maybe trading level 2 for support. And if it goes higher, great. But you're not going to be in the painful trade of watching this thing just go against you.
I think everyone who is involved in Bitcoin watches it, comments on it, considers it. You have to ask yourself, which one are you? Are you a trader or are you an investor when it comes to Bitcoin? Now, you can be both, but you need to clearly define what you're doing with it. Personally, I am exclusively a trader on Bitcoin. I don't own any for the long term. I don't hodl it. It's not that I don't necessarily believe in it. I prefer to trade it when it's in season and stay away from it when it's not. And obviously, that's a little easier to say today when the market for crypto has been terrible. I'm glad that that's my position on it. There have been many times where it's gone straight up and I'm like, dang, I really should just be holding a piece of it. So double-edged sword. I've got the home field advantage when I say that now. But my thought process on it is much the same of what you just mentioned. You start losing the momentum of this thing. To me, Bitcoin and Ethereum and all the crypto world is a wonderful trading vehicle. It is a pure risk on, risk off sentiment tool. In my personal opinion, I recognize that there's a fantastic technology and many people really believe in it and love it. And I get it. I'm not dogging that. I don't have enough conviction to just stay huge in it. A lot of people are like fully invested in crypto and it's been a really tough year. I totally get that. For me, I would agree with you, Chris. I think that from a trading perspective, I would love to see this thing bottom out, start to roll higher. And then, I've traded Bitcoin for years now. I really enjoy looking for momentum breakouts and upside move. But right now, if I was bearish on the markets, I'd be using it as a short proxy. I'm not. But if I was, I am kind of looking more on the positive side of markets. but I'd wait for technicals to start showing some signs of life personally
sure.
before adding longs.
Yeah, I totally agree. I think that now it's up to the bulls and price action to prove like, hey, we don't suck anymore. Let's actually start to see these things. So you go from a falling knife. I mean, that's the classic joke. You've got a fundamental trader and a technical trader having dinner together, and the knife falls off the table and it stabs the fundamental analyst in the foot, and he's like, why didn't you catch it? And he's like, I don't catch a falling knife. And he's like, why didn't you move your foot? Because I didn't think it'd go that low. So they're both wrong.
Yep.
So anyway, it's like it's at the point where everything's crossed over. It looks terrible. I've got a couple like hopeful levels, but like I said, with my exposure, I'm just going to repair it, keep the the base position. And honestly, dude, I might just work my way through it and say I'll start from scratch. I mean, I just crunched the numbers today. I'm like, you know what? Some of this like holding and leaps and doing options in the bigger picture, sometimes it's exhausting. And I'm like, what if I just sold? If I buy the SPY, I sell an at the money covered call and I get $600 a week. And I did that for, 52 weeks in a row. Yes, it's going to be with the ups and downs of the market. I obviously know how to put some hedges on to protect the downside more. But the reality is if I could collect, $500 or $600 a week, let's just say $500 a week, you go out 52 weeks. Oops, I did this great math there, 552. So about 25 to 26K on just, you take 100 shares of the SPY. It's going to cost you about $66,000 right now, but you can also get in and get out every single week. And it's not perfect, but you're basically on a 100K account, you're making 26% with something that averages about 8% a year. I just think like there's definitely ways that I can make my trading life a lot easier and stick to like one thing. And again, I'm not like the all eggs in one basket type guy, but it's like for just a trade, I mean, I've got plenty of capital to swing. I'm just like, make it simpler. I don't need to have like the exposure. I've been actually closing up quite a bit of profit these last few weeks and raising more capital. So I'm still about 56% cash right now. I'm pretty happy with that. And obviously I'm watching things closely. And but the crazy part is even though I've been nursing some drawdowns with Bitcoin, what's funny is, dude, I have like 15 to 1 and 20 to 1 and even up to 40 to 1 hedges that if this market absolutely craters to the downside, like I'm probably going to make more money to the downside because these leverage positions they pay so well, dude. I'm risking like less than 1% to make like 20 or 30% of my portfolio, which is nuts.
Well, here's my just to add a little bit more context. I mentioned it briefly a second ago. I talked about when it comes to my outlook on Bitcoin, I do have actually in Edgefinder a bullish Bitcoin reading, which is pretty surprising. But again, main idea here is that Bitcoin technicals do not look good, right? Technicals right now don't look great. But I'm still getting readings on silver, NASDAQ, Dow Jones, Russell, at least in Edgefinder's calculus. Fundamentally, we don't have doomsday happening, right? So that's all that's saying. Is it saying, GDP numbers haven't collapsed, inflation hasn't skyrocketed. And I think that although it feels terrible out there, it feels real ugly. And I heard you talking about Mag 7 being disconnected from the market. I think that when you're looking at the overall market, the NASDAQ by itself is not necessarily the perfect indicator by any means. But I do think that there's still some fundamental floor to this market that I still think that dips overall are buying opportunities. We also talked about the technicals from a moving average perspective. I outlined my idea. Really simple. Same thing on S&P 500, but generally this 100-day moving average, I'm looking at that as a possible bigger picture by the dip. Or if we can get momentum to pick back up, if the bulls come in strong enough and we can break back above the 50, I'm probably going to look for an opportunity to rejoin the trade. So I am still constructively bullish on this market. From a Bitcoin perspective, the reason I brought that up is because, look, I want to be long Bitcoin. If Bitcoin can give me the right setup, I'm there. Like I will probably go long Bitcoin because I like the fundamentals of this market. I don't think the AI trade is about to blow up. I could be wrong, as any trader could be wrong at any given time. But I think probabilities are that we're not at the end of the bubble and that it's all going to come imploding down. I still think you have some solid fundamentals. You have an administration, whether you like him or not, is like his whole scorecard is keeping the stock market pumped higher and keeping interest rates lower. I think that is a huge tailwind, and people are so caught up on, the Fed might not cut in December. Sure, that might be correct, but I think their next step is to continue to cut interest rates. You have corporate earnings that are really strong. Now, again, everything I'm saying, I could be wrong, but risk accordingly. That's how I'm taking the approach. So I still think there's a risk on rally that could be good. And I also think rate cuts are going to continue to happen big picture. So I'm looking at silver. I'm looking at gold. These things are bullish setups for me if we can get some pullbacks. Just a quick look at a technical side of gold. I'm looking for a pullback if we can get it back into this region around 3950 to 3900. I'm going to start to take some trades there, see if I can catch some upside. Stop out if I'm wrong, but I think that there is room for this to move higher. I actually like silver more. I know we've talked about this many times, but I like the silver price action a little bit more than gold, especially recently. Check out how gold failed to reach its prior all-time highs. Silver just tapped into it and pulled back. I wouldn't call this super bearish just because, sure, you could say, oh, that looks like a double top. Well, the way I look at technicals, keeping it real simple, is a double top's not a double top until it breaks structure to the downside. Then it's a double top. So I would say still innocent charts in terms of the precious metals. They've had phenomenal years. Momentum still favors upside. And the way I trade is I use a stop. So, does it scare me a little bit to buy high? Sure. But I'm kind of a trader that prefers to buy high, sell higher, using stop losses, trailing stops. I mean, if you're listening to what I've said so far, that's kind of my motto is buy high, sell higher. It sounds ridiculous, but as a momentum trader, that's what I'm after. And there's all sorts of different walks of life. There's the value traders. There's people who like to buy low, sell high. Chris, I know you're a first base hitter type of trade. You in and out and you just take profits all over the place. And I'm a little bit more of the home run type trader. I like to go for big runners when I can catch them. Now it's not very frequent that I catch the beautiful trade that I want, but I can still find every once in a while those big hits. So to everyone in the audience, everyone trades differently. Chris and I trade pretty differently to each other, although we have generally a similar outlook on markets. We use an expression that we've used for years on this stream now, the constructively bullish through being cautiously optimistic, right? We stay generally bullish, but where I think we don't go, destroying ourselves, where a lot of people do, is Chris, you mentioned having a Bitcoin long position, but you're not like 120% leveraged on Bitcoin.
Right.
That's the difference where we say cautiously optimistic. We're not saying aggressively leveraged optimistic. And that is the difference.
Yeah. And also, I mean, I actively lower my cost basis. So as this has been happening, I've been selling calls and lowering my cost basis, doing it short term, because as we're in a little bit of a downturn, I am week to week, like chipping away with, 50 cents or a dollar or two, like lowering my cost basis a little bit more. And that's fine, because that just helps me when all of a sudden we do maybe stabilize, then I can make the decision whether or not I want to turn it into like an income trade, let some of it go, let it all go, just, maybe neutralize my position for, profit. It's like, I'm not worried about my ability to repair a down trade, a down move. That's oftentimes where I kind of start, is like, here's my trade. If I were to own that asset, would I be able to repair that asset? And usually if my answer is yes, then I'll take the trade, because my plan B is I'll fix it. If I'm in trouble, I'll fix it. Case in point, like, I mean, this whole year since the April bottoms, it's like, I would own the SPY below the April bottoms. I'll own the Qs, the April bottoms. I literally, for the alerts I did this week in Pulver alerts on SPY and Qs, I would own the SPY at like 450, which is $30+ below the April lows. The chance of assignment is like 2%. But if it does get assigned, I'm going to have like a 34 to 35% discount and start my ownership. And even if we drop to 50%, I would dollar cost average in. I'd lower my cost basis even further, and hopefully ride this thing back to all-time highs. So nobody wants that to happen. But again, man, this market from the stability standpoint, I think it's going to be, with the sentiment as bad as it is, and everyone talking bubble. And I think that the bear crowd, especially, it's so noisy. It seems to be like all it is everyone is like, the fourth turning is here. The bears are, I get it, man. Like, I get that there's stuff to be worried about, but my God, if this thing can do one thing, it is climb the wall of worry. And that's bubbles can last way freaking longer than people think. And this, as like, just, I go back to follow the money, follow the flows. I just built this out while we were talking here. This is money supply. Every money supply from US to Europe to China to Japan is higher. Money supply is higher. So if that continues to happen and fiscal policy continues to put in added money supply, if central banks are accommodative and central banks are cutting around the world, this is going to continue to fuel inflows, because it's making it where yields have been a little bit interesting this year. They've been stickier, where it's like we're not seeing the long end of the curve drop with rate cuts going down. But I still don't know. I mean, did you know this year, Nick, that the bond markets had like the best year since 2020? And that's not saying a lot because we've had a 4-year bear market.
Sure.
So it's not saying a lot.
You probably can't tell because on the chart, the gain looks so small relative to the loss in the last.
Look at, I mean, yeah, exactly. I mean, the TLT for the year, take a look at the 12-month chart.
Mm-hmm.
I mean, if you tell me that you want to celebrate a TLT positive year, no thanks. Because this thing in 2020 was up to $157 and now it's down to 90.
Right.
And so it's green. I'll admit it's green on the year. But what does this mean for bonds in the bigger picture? I have no idea. There's a pretty valid argument that it's the melting ice cube that just means like if we're going to continue to grow our deficits, our ability to service that debt is going to be harder and harder and harder. And therefore, it's like having bonds and have that exposure, having that defense. And again, I don't think the U.S. will ever default. I think that we've got bigger problems if the U.S. defaults. That'd be a sovereign wealth crisis. But I don't get excited about having bonds in my portfolio outside of a short-term position. By the way, do you have any TLTs still left in your positions? I took profit on my TLTs early this year. Yeah, I dumped my TLTs, and I'm pretty much I'm taking that whole allocation and I'm putting it into gold and silver. I like gold and silver a lot. I like Bitcoin as well. Bitcoin's performing like a turd right now, so I'm just liking gold and silver a lot.
I have a really small. I don't have any options trades on. I have a really small, just kind of money sitting in TLT, but it's not very much. But yeah, Chris, I've got an experiment. I think this will be fun for the viewers too. Let's go through just a list of things, rapid fire version, and we'll just go bullish, neutral, or bearish on these things. Let's say next 1 month.
Sure.
S&P 500, bullish, neutral, bearish. What do you think?
Neutral.
Okay. NASDAQ?
Neutral.
Okay. I'm going to say bullish on both. Dow Jones?
So when you say bullish, are you meaning like new all-time highs? Is that fair?
Next 1 month
going up like 2% doesn't mean bullish. It's like we're already, we're within a few percent of all-time highs already. I say we have some noise. We might test the highs. We might, poke the lows, but I'm pretty neutral when it comes to like, I don't think we go down, but it's going to be hard to make crazy new all-time highs. So I'm neutral. You said bullish. What's the next one? Sorry.
Dow Jones, same thing, neutral?
Same. I'll be neutral. Yeah.
Okay.
Russell, I'll be neutral.
Neutral.
Yep.
Okay.
Yep.
I'm going to say I'm neutral on Russell, neutral on Dow Jones. Although, I just don't love the technicals on Dow. What about foreign stocks? We could go through all of them, but just give me generally European stocks, UK stocks, Asian stocks. Still neutral? Are you feeling more strong on these?
I'm actually, so I think you're gonna have to take on a little bit of a pullback if the U.S. markets are sideways. I mean, here's DAX, here's FEZ for Euro stocks. I mean, so FEZ is an ETF for the top 50 Euro stocks. I like this one with the this is a 100, 144, 200. Honestly, I would keep this thing running. I do have some FEZ exposure, and I also have SCHY, which is a Schwab ETF that's international. So it's like Europe, China, India, non-US. It's all non-US. International stocks, I'm actually bullish. Okay. It might be dollar cost averaging, buying some dips, selling some puts. But for the most part, I'm actually bullish international.
Okay. I'm a little bit more on the neutral side when it comes to international stocks. Let's see, mostly because I think the dollar may have a little bit more upside, but let's go to dollar. What do you think on dollar? Is dollar closer to a top here or I don't know. What do you think?
Well, it was such a crowded short trade that this rally to the upside, again, this is where we come back to risk on, risk off. The dollar has been a risk off tone for me. So if we get to fresh highs and we're at 100, 101, 102, I don't think the dollar goes too much higher than 101, 102. I think that the Fed next year is going to be looking intentionally to weaken the dollar. Okay. But right now it's like we could probably either, go sideways nowish right around that 100 handle. A little bit higher up would be like the pain trade. I think 101, 102 is the pain trade to kind of, get rid of these shorts. But I do think that this turns, probably 102. I'm looking to get bearish again. Okay. So for the most part, like we stall here, maybe resume bearish. If we squeeze up, I'm still kind of capping this move around 102. I'm pretty bearish on the dollar.
I think it's a fair take. Like you could have a squeeze higher.
Yep.
I'm kind of with you on that. I think next like 1 month maybe could continue to see a little bit of hawkishness, but I see limited upside to the dollar as well. What about the VIX?
Bullet. No, I'm long the VIX until April. If in case we have like a 30, 40, 50 spike. But this is crazy, dude. Like we've had the VIX at 20 sustainably for the last like 3-4 weeks, where it's had like up to 25, up to 29, down to 17, up to 20, up to 22. We're trading right now at 23 VIX. Like, I mean, either this is the setup for a 30-40 VIX spike that ends up reverting, or this is just the buildup and the uncertainty, and it just kind of naturally reverts back to like 16 or 15 or 16.
Yep.
It's a hard one, man. It happens so fast, but like long VIX, if we see a 40-50 VIX spike, I am synthetically long. I'll grab a couple $1,000 in a hedge. And that's out to April. But if I, can turn it in, I think I paid like $300 for that trade. If it's up, $2,000 or $3,000, I'm taking profit.
Yeah. I think with the VIX, my personal take on it is I'm sniffing out, and this could just be a hunch, and I'm not trading based on this.
Okay.
But I think there's some sort of capitulation move happening and gonna happen in the crypto. Like I think, you
get
get
like VIX
to the
up
downside. I think you're gonna get a flush.
Interesting.
Because again, you've already had like sell. I think you may have sort of a bottoming candle, which often happens where you just get this nasty kind of like Monday open or something like that. Remember that August 5th? I know we remember that well.
Like, you're talking like July to August 2024?
Yeah, like just that flush, that scare to really spook. I wouldn't be surprised.
And April this year, April 7th low, that was an awful feeling day. We gapped 4% lower, flushed down, ripped up later, like 2 days later. It would have been August 5th, 2024. Would have been that like crazy deal.
That's part of my hesitation with being too bearish on the VIX. I think, you get up above 28, 29, the VIX. I'm almost always short,
Oh, for sure.
Short vol. Yeah.
All I'm saying is if we get up to 30, 40, I'm taking profit on my VIX longs, but then it's like, okay, short the VIX, and we see like a bottom's going to be in the markets. We V bottom and kind of work our way through it again.
Yep. I agree with that. Precious metals, gold, silver.
Bullish. I don't care if these things pull back 20, 30, 40%. I'm still bullish.
Okay. Yep. I would say the same thing. I think metals have a move headed back to the highs, just because again, everybody's sort of, this momentum has been so solid. I think it's going to be a more attractive thing into next year. We've talked about this many times, but a lot of times these things cluster in a 12-year window. I talked about this on our webinar presentation. As insane as this was, literally 1 year to the day when we did the previous webinar together, Chris, I made the point that I remember saying, look how ridiculous this candle looks. My opinion is that gold keeps going because it typically clusters like this. It goes in these just multi-year, every single year is up, and it eventually will end, and it will, maybe that's next year. It's impossible to say with certainty, but I think that just like this candle looked ridiculous last year, this candle looks ridiculous now. And
it does.
It's like it just but that it looked the exact same last year. I mean, it was not as good of a year last year, but it's still just, I remember it being like this. There's no way this keeps going, and sure enough, it did. So I think precious metals on dips are buying opportunities personally.
Yep.
What about oil? Oil's a tricky one.
Yeah, I think there's going to be, if oil is sub 50, we're in a recession. I don't think oil gets weaker with like, AI build out. I mean, oil going down is recessionary. I actually see in the next maybe 1 to 2 years, I could see oil getting back to like sub 50, maybe into the 40s. But it's hard, man, because like we were supposed to have a recession in 2022 and we didn't. Technically, we didn't. We had like this rolling recession. Even though it was a bear market, it wasn't technically a recession. Everyone thought there was going to be a recession in 2023. We didn't have it. What about 2024? There was a bull market. 2025, the fattest tail left and right that I've seen in a long time. Oil, I could see us leaking below, but I don't know why necessarily. I mean, I think pressure to keep oil lower intentionally. I think supply and demand games keep this thing pressured to the downside. I think what oil sets us up for, and this is probably bigger picture, but going out like maybe 5 years, I could see oil at like 40 or lower. And I would load up and have like probably a 5 or 10% position on oil, because I think we go from 40, 35 back up to 60, 70, $80.
Side note, do you like energy stocks?
I do like energy stocks, but I'm not trading them primarily for like prices and oil correlations. I'm trading energy stocks for like utilities. I'm trading them for, the demand of electricity, the demand of GPUs and computing power. Like if we're really all in on this AI stuff, and, I think what's interesting is like China is possibly way ahead of us when it comes to energy efficiency, and we are just all in right now. And it's almost like we are going like hyper speed to just try to catch up we can't get enough computing power. We can't get enough grid. It's like I mean, out here in Utah, we have data centers that are in, basically Utah is a mountainous desert. And so in the middle of nowhere, there are data centers being built. And if they're near small towns in the middle of nowhere, your electricity bills are going up every single month. And that's happening around the country right now. I just saw a commercial the other night for Meta trying to make it seem like they're, helping jobs and building jobs in small town, communities in Iowa. And I'm like, are you like, is Meta act? I mean, they didn't they just fire like 10, 20, 30,000 workers? And they're like, growing America. I'm like, growing America. It's like, I don't think that's true at all. Your data center in your town is great, but that doesn't bring jobs to the town. It's just, I don't know. It's weird.
Right. Yeah. So. And, we'll see, man. It's difficult. I also like energy stocks. I think that the demand for AI is going to continue to grow. I've made the statement. I think, is there reckless spending probably going on? Sure. But I don't necessarily think we're at the end of this overall AI cycle. I think you're getting right now we'll look back at it. In my personal opinion, I could be wrong. Clip me, come back in a year and call me an idiot if you want to. I don't care, because everyone's right and wrong sometimes. But I think we'll look back at this time and say, hey, this was a nice flush out that we needed in the market. And I do hope that in the short run, it has a little bit more downside, to be honest. I think it would be healthy. Talking about specifically, equities and crypto. It's not fun when it's happening. It feels terrible.
Yeah, but it's definitely, it feels like deleveraging. There's a lot of deleveraging coming out right now, especially in the crypto space, which I think is needed. And honestly, it's needed in the equity space as well. That's what 2022 was. 2022 was not necessarily a recession. It was just a de-risking, deleveraging, but the rates were being raised during 2022 as opposed to being cut. So a little different. But yeah, I think the crypto space certainly is getting deleveraged right now.
Tomorrow, everyone, we get our first. We're back to school tomorrow. We get the NFP report for September.
Do you believe it? Do you like when the numbers come, you're gonna be like, that's exactly what we need to like focus on as job? It's like, do you even believe the data coming out tomorrow?
Well, even if you do believe it, whether you believe it or not, the second question is it too outdated, or is it still very relevant to get an idea? We did get unemployment claims yesterday. Unemployment claims came in and they were slightly worse than expected, a little higher than anticipated. So we'll see if this jobs data comes in and it is a real soft print. What does that leave us with? Okay, well, rate cuts probably come in, but does that, do you celebrate the rate cut, or do you fear the bad jobs market? It makes it a little tricky. So we're going to get some jobs data. By the way, meeting minutes are about to drop here. Just as a reminder, we do this every single time. But just as a reminder, Powell is not speaking. It's not a press conference. It is just notes from a backdoor meeting with the Federal Reserve getting disclosed. So we're going to keep an eye on headlines on our side and try and bring that to you guys. Audience members, if you could help us out, if you see anything that hits the wire that is of interest, drop it in the comment section and I can highlight your comment. We can take a closer look at it. But yes, going to be keeping an eye on that. Should be dropping here any moment now, and we'll comment on that once it comes through. Also, just real quick, housekeeping, the Black Friday sale for the Edge Finder is going on right now. If you want access to our tools, scan markets, if you want to get access to our trade alerts, Chris and I are also available inside of our VIP room. If you want to see the trades that we're taking, all of it is currently 45% off for stream listeners. Here is how you get our lowest prices of the year with the fresh Black Friday discount. You can scan the QR code right above Chris's head or in the live stream chat. Simply click this link to speak directly to a member of our support staff. Just let them know you're watching the stream right now, and they'll give you our lowest prices of the year on our store-wide discount. Get our trade signals, get access to the Edge Finder, get access to the stock box, the Pulver alerts, whatever you need. Grab them now because they're at the lowest prices all year long. All right, let's keep an eye on these headlines here. So if we find anything.
I mean, price action is pretty muted. Not sure if you've seen anything. Dollars had a pretty big run today in currencies. Dollars, king of the food chain today. New Zealand is the weakest. Kiwis down. But I still am looking at the Japanese yen pairs, man. That Swiss yen technically looks great. I just have zero confirmation, but I don't know. I keep saying that it's like the Japanese yen gives us a lot of strength. Part of me hates that trade because that's going to come with a lot of risk off. So it's kind of the catch-22 of, would you like to get 2,000 pips on a Japanese yen trade while your entire stock portfolio goes to the toilet, or would you rather be long and stable the stock market and let the Japanese yen just continue to do radical monetary policy?
Right. That's the question, is like, it really is a hedge to be long the yen, I think, right now. So,
which I am long the yen.
Right. Right.
It is another hedge that I have running in the background.
Right. And that's the thing, is I think, if the market freaks out, that unwind could be pretty nasty, especially with the recent kind of development where it looks like they're not going to cut rates as much with their new prime minister. At least that's the rumor. If you did get something that shocked the global supply, that added recent confidence in the carry trade or yen short position, if that unwound, it could get even nastier.
For sure. I've seen in the chat here, Nick, I'm sure you've seen as well, that there may not be a release tomorrow.
Did they change it again?
Well, I mean, the calendar still shows it is solid. Let me see if Bloomberg has it updated. Let's go to Thursday. Number one, it's weird that we have a non-farm on a Thursday. Like I said, I don't even know if the data is going to matter that much, just because when is this non-farm? Is this from 60 days ago? Is this current? Like, I'm not even sure. So let's go to, I mean, Bloomberg has it officially at 8:30 a.m. Same forecast around.
I'm pretty sure, Chris, we got this from the BLS website on our internal team. If we could show my screen really quick. This is from the BLS's website. They announced that the employment situation is going to be released Thursday, 8:30 Eastern. So we are getting NFP today, tomorrow, at least according to the BLS website. If something changes, but that should be live tomorrow.
Good. It's like, stop hiding this crap. It's like we didn't get CPI, we didn't get PPI, we didn't get non-farm payroll. It's like, just start getting back to the regular, like, just get the news out there.
Well,
you
Chris,
can fudge it later, but just get it out there.
I don't know how much you look at it, but I'm really excited to get the CFTC report at the end of the week. I am so curious because we're talking about a huge jump since last reporting.
Yeah.
What have big players at the table been doing? Have they been buying precious metals? Have they been selling the stock
deleveraging the crap out of their portfolios?
Yeah, like, it's hard to say. I mean, I've had this idea in recent times, and I could be proven right or wrong on this, but I've had the idea that I think any dips, big money is probably going to try and chase it into year's end. I'm curious if we get any validation on that, as we have had a little bit of dips recently. Do we start to see institutional money? Again, this will update on Friday. I'm just going to pull this up. Data has been delayed since the government shut down. We're getting fresh data soon.
Okay.
Gold, NASDAQ, this is outdated data. We're going to get new data on Friday. I'm very curious to see, with that big gap in time, what have they been up to?
Right. Yeah. I think deleveraging would be possibly what you guys glean from the data. I would not be surprised. Chasing, not necessarily. I'd be curious to see, like, also the Bank of America, like, manager survey, to see where people are exposed. The NAAIM, that's an investor management survey. They have taken a little bit off, and usually when they get a little frothy, there tends to be a pullback, which we did see. If we go to, I've got a website there, so NAAIM. When this exposure gets up to 100, I tend to look at some tops. I tend to do some bear call spreads, some broke wing butterflies, things like that. And since we had that, like, low market breadth pop up to all-time highs, SPX was 69.20. Man, I'd probably put on a dozen trades at the 7,000 handle and just said, if we stay below 7,000, I'll make a good little chunk for a couple weeks, and it worked out pretty well. But yeah, I think probably just some de-escalating, some deleveraging, but still maintaining. It's like, you don't just, money just doesn't leave the markets. Nobody just goes straight to cash. It's like, it rotates into defensives. How's your like sector stuff looking right now?
Well, I'm not really long.
I saw you bought Procter & Gamble. Is that what I saw today?
I did do that. Yeah, that was my boring trade of the day. I've been stacking my boring companies recently. Just a little bit of, I just want dividend stuff. I've been kind of on this, I was listening actually back to our webinar from 2024, where I mentioned, hey, if this market keeps going up and up and up, I'm going to continue to slowly stack defensive stuff that pay dividends. And I have been doing that a little bit more recently, and I said it again in our 2025 going into 2026 webinar as well.
Yeah, so MO is one of my favorites. MO is Altria. BTI is similar. That's British Tobacco. They're 7%. Pfizer is a 7+%. Pfizer could be. I don't want to say it's going to be like a great play, because who knows? But dude, if Pfizer just comes back to like even some basic fib retracements. The upside of, let's say this thing gets like a $10 bump. That's 30%. And I could see the AI, like I could see this chase for tech stalling, not necessarily falling, but stalling. And I could see like healthcare, banks, like the white collar admin jobs like start to be like, I think the AI push goes into like that space. I think that we start doing more R&D. I think we start getting like faster results, and I think healthcare could benefit. I don't know. I hope that like in 2026, maybe there's like a bigger push into making healthcare more affordable in the US, making drugs more affordable in the US. If that's the case, maybe a Pfizer benefits, maybe a Merck, maybe an Abbott Labs, maybe Gilead, like something along those lines. There could be some healthcare plays. Yeah, so it's kind of an interesting play where it's super freaking boring, dude, but with a dividend at 6.76, and this thing's already beat up off the highs, I don't know, 50%, 65% from highs, and it's a fair market, discounted cash flow at like $60 based on like forward earnings. Is like, I think that we should be at 35. I'd be happy to see it at 35 and have it potentially a nice pop in Pfizer next year. So just a play.
So far, nothing big in terms of from the FOMC meeting minutes. I'm just looking at price action here. Looking at the 15-minute time frame, you can see nothing really big in either direction. A little bit of softness on S&P, but nothing of any substantial substance here. You also have NASDAQ pretty much flat to unchanged from where it started here. Russell, the same thing. Dow Jones. Dollar index remains firm, though, so maybe at least nothing blatantly dovish coming out from meeting minutes, I would argue, just based on the dollar's reaction here. Dollar continues to look firm. I think, my thought process on dollar is you have a huge test happening right now at this 100 level, which we talked about. But I do think, Chris, if we're going to see a little bit more softness, if we're going to see more pullback, I would not be surprised if the triggering event, I would argue, which was a combination of rate cut probabilities getting slashed as well as challenges to the AI spending stuff. I don't think those things are actually as disconnected as previously thought. We know stocks are valued very expensive. When you slash probabilities for rate cuts, it instantly starts the question of, are these companies priced a little pricey if borrowing costs aren't coming down? So, I think that those two things are connected. And I think more, as you mentioned, the pain trade squeeze in the dollar, if you see that sort of, push up, I would generally agree that would probably send stocks in the short term lower. And ultimately, I probably would be a dollar seller up at there alongside being a buyer of stocks at those discounts.
Looking at that trade right there, Nick, I think that almost would be a surprisingly perfect correlation to see the dollar hit that 102 handle. And that's going to be very similar to like the S&P or the NASDAQ hitting the 200-day moving average. I wouldn't be surprised if it lines up to be about the same thing where dollar puts in that like squeeze to 102, S&P and NASDAQ flush to the 200, but then it bounces hard, V bottoms. And, now we're making a aggressive, like, back in, buy the dip. The market's been deleveraged. Time to get the flows back and running. Try to finish the year on a positive note. Something like that. Like this is a very vulnerable window. It's not fun to know that next week is Thanksgiving. We're going to start seeing holiday disrupted trading, and we might still be looking at like a wild weakness window where it's like, don't take your eyes off these stupid markets because it might be surprisingly volatile going into the holidays. Which again, maybe most people don't care, but in this group of thousands of people that watch A1 trading and you and I that do this stuff every day, it's like we watch this stuff every day. And sometimes I have to remind myself, like, do I live in my own bubble where it's like, does this stuff matter that much? It's like, do people actually care? Like, I think they do. I've talked to my brother a lot. He's in central Indiana. We just talked about like, what's the temperature, man? Like he's in the Midwest, he's in a big ag state. And he knows plenty of farmers. I got a buddy that he's been in crop insurance for the last 10 years. It's like all the stuff that's going on with soybeans, crop insurance, weather cycles. Farmers are, like in debt to their teeth, and they're just relying on subsidies, and they're like the government shut. It's like all this stuff. It's like, it can't be great. And yet it's like, that's the K-shaped recovery, right? The K-shaped economy. And none of it's fun. I just don't think that the reality is, our economy is not really a reflection of the stock market, even though we use it as a scorecard. There's people that are living paycheck to paycheck. There are people that are not enjoying this economy at all. And that's showing in Trump's approval numbers. That's showing in, voting right now with like the New York mayoral election with the Madani. That'll show in the midterms next year. It's like, that's about the only voice you have when it comes to the political voice. If you want to vote on it, vote on it. But other than that, stock market's there to kind of feed the beast, and it's like this dumb zombie like feedback loop that just flows keep coming in. The markets find a way to like be stabilized, and we also have a double-edged backstop. We have the Fed that can be reactive but still be a backstop. We have the president that can still be a backstop, right? I mean, so it's hard to break, man. It's hard to break the market. That's all.
Yeah. And real quick, just shout out to my friend James Kirkland. Came on the podcast recently. Good to see you, James, in the chat, my friend. Yeah, look, so when it comes to the pullback, I would agree because you have a couple backstops. As you're talking about, Trump administration wants to see a stock market win. They've got midterm elections that they want to probably pump up and look good for. That's just human nature. If you want to win votes, you try and make people feel good ahead of the vote. At the same time, Fed, I think I thought this was kind of interesting. I think that the Fed some members want to cut rates. I don't necessarily think it's because they, the stock market's got a pump. I think it's definitely more in line with what you said when I first joined the stream, which is, the stock market is not the economy. The economy has more clear signs of hurt than just the NASDAQ, right? The NASDAQ, you have some terrible stuff out there in terms of parts of the economy that look really rough. There's some stuff that looks great, right? Corporate earnings, tech spending, the wealthy class looks solid out there. But then you have, and that's what's kind of propping up the whole economy, the economic system, is the higher end of the consumer as well as corporate spending. But then you have jobs data not coming in great. You have restaurants by themselves, just their earnings calls have been pretty horrible in terms of the lower end consumer really hurting there. The housing market's been locked up for years. You just have a number of things that have, I think gradually weighed on this market. I don't necessarily think that's a reason to sell or short the market or get incredibly bearish. But I do think that that's a reason that the Fed will continue to sort of drift in the direction of, okay, we need to ease monetary policy for that cohort who they ultimately serve.
Yeah, two things. The BLS announces that October jobs report have been canceled, but they'll still issue the September jobs report. So what we see tomorrow morning is going to be September, not October. Yep. And on top of that, what was I had one other thing. I think was it sector related? I just lost it. Doesn't matter.
All good. It's all good. And then one other thing is they pushed back the we're not going to get the October. Then we're going to push back the November release to, I think, December 17th or somewhere, or December deeper into December, rather than our usual first Friday of the month.
What a mess, dude.
Yeah, it's coming, but it might come a little slower. Gold here also big sell-off here early in the day, gave back pretty much most of its gains. Now just chopping around. Yeah, we'll see. Again, nothing major. I think your big countdown now, Chris, is got to be the Nvidia earnings after.
Of course, I remember I was going to say it's the probability on the Fed. So even if they pause in December, they're still looking at 1 to 3 cuts in 2026. So it really doesn't matter. It's like they can pause and stand their ground as soon as Powell's done as chair, whoever steps in. And again, I don't think that who steps in is going to be a sycophant necessarily, but I think that it's going to be a Fed that's probably going to play the tune of a weaker dollar and a more dovish Fed. So, are these tailwinds? I think if anything, the economy needs that right now. But like, this is what I was showing. It's like, this is the big jump in the pause probability, but you go to January, it's still a 50+%, which is the highest probability that they cut in as early as January or March or April. So either way, it's like you're going to get a cut in 2026, whether it's 1, 2, or 3 of them. We'll find out. But how many cuts is that, dude? If let's just say that we cut 2 more times in 2026. Well, we had 4 cuts or 3 cuts? We did like a 50, 25, 25 in 2024. Was that right? We cut 3 times for 100 basis points.
Yep.
That's not right. And then we've cut twice, September, October. And if we don't cut in December, so we have, that's 5 cuts plus another 2 or 3. It's like, we'll have like 7 cuts, which is literally what the market had been talking about and pricing in anyway. So December's pause doesn't really do anything.
And Chris, remember we were doing this 2 years back. We were talking about the rate at which they cut rates. And so far, it's been a slow rate cut process, which we know historically is the better type. Rapid rate cuts are usually too late and problematic.
Yep.
I know that we get so caught up on, oh, are they going to cut this coming December? Are they going to cut in January? But it's like, just zoom out and just ask yourself, is the Fed still in the direction of rate cuts? Sure. Yes, they are.
Yep.
Are
Yep.
corporate earnings still holding up okay? Yes, they are.
Yep.
Is there overall less or more geopolitical turmoil than in April? I would say less. Again, we've seen some things improve. We had ceasefire in the Middle East. The tariff stuff at least has dialed down for now. Sure, something could change tomorrow, but we don't get the luxury of knowing what happens tomorrow as traders. We trade what we're in right now. And so I think that right now you've got a decent scorecard for, in my opinion, maybe a little bit of a bounce in December, and maybe a decent year in 2026, all things considered. We'll see.
Yeah.
We'll trade it the whole way through.
If we have a reasonable correction here by the end of the year, I think the first half of 2026 is pretty good.
There you go.
If we are up to all-time highs by the end of the year, then I'm thinking more sideways as we start 2026. But if we have let's say 10%, we get to that 200 moving average or 9 or 10% correction from the all-time highs. I think first half of 2026, before we deal with like midterm drama, I think if you can go January to June, January to August, before things get a little dicey towards the fall, if we come down first, let's say we just get a little bit softer in here. And also one thing to look at from the technical side is what's never fun is watching the market, like you said, Nick, the 2024 flush that we had, even though it did pick right back up and, kind of V bottom its way out of it. That was like an aggressive cup and handle. We just flushed down, ripped up, and then paused. And then once we broke that, we're up to all-time highs. It could certainly do that. There's two ways I think that the bulls can kind of maintain the posture of this market. If we have a flush and it's immediately met with VIX spikes, reverts, bottom is in, and we start to rally from there, that's one way that just be like really difficult. And you'd have to be like super agile and ready for that. But that's clearly a way the market could bottom. The other one is we just have like this slow, awful grind, but it's also orderly. It's organized. And that also was a pretty healthy correction. So 2023 did that, where I know my charts are unreadable. I can see it. It's I got messy stuff on here. Sorry. Here's 2023. This started in August, but it was slightly high to low, high to low, high to low. It was organized. And then we bottomed and we ripped, right? So we were in a bull market. We just had a correction that led to another healthy bull market cycle. So if this is the start of maybe this first chunk, we come up, I mean, again, maybe NVIDIA today can save the market, at least in the near term. We stabilize to the end of the year, but if it's high, low, lower, high, lower, low, but that seems pretty organized. We still find resistance. We watch this trend line break. We get up here, all the momentum is there into 2026. So I'm still like, I'd say, if the pain comes in either orderly or aggressively, but it bottoms out hard, like the market still, to me, I'm pretty bullish on a lot of my positioning through like May, June, July, 2026. And then I'll probably do a lot of either de-risking or having some cash at the ready for, maybe fall of 2026. I think I mentioned this in the in our session this week, our little Black Friday special that we had on Monday. Did I mention something like the 100-year move or the 100-year anniversary of the Great Depression?
I think you did.
So that, I mean, again, I'm just throwing it out there. Like maybe that's the big surprise that the market's waiting for, is like maybe the market's just going to sit here and simmer for a while and drive everybody crazy with uncertainty and noise, but it just stays the same. Nothing's really damaged. It's just the positive drift machine until maybe the 100-year anniversary of the Great Depression. And there's our, 30, 40, 50%. There's our fourth turning. There's where things get really ugly. Who knows, dude? But that's a long time. That's a long ways away, honestly.
Yeah. Well, Chris, we've passed the FOMC meeting minutes. Nothing really major happening, at least in price action. Of course, we'll cover it in our next sessions if we get something of interest that comes out. Of course, NVIDIA earnings happen after the bell, guys. Please trade safe. Be careful out there doing that. Chris, I think we're gonna wrap up here if you're good, and good. We'll be back, of course, for next time.
Take care. Thanks, Nick.
Right. See you guys.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.